Welcome to Live Life on Purpose with Jose and Jeff Feliciano from Feliciano Financial Group. In this podcast, brothers and certified financial planner professionals, Jose and Jeff, explain that money is just a tool to achieve the things you want in life, a tool to make the decision to live life on purpose. They draw from years of experience to demonstrate that when your money aligns with your goals, you can live a purposeful life. Because when your vision is clear, your decision is easy.
Hello and welcome to Live Life on Purpose with Jose and Jeff Feliciano. Jeff, what is going on today?
Hey, life is good. How are you?
Oh, I'm doing fantastic. I'm here to learn from both of you guys. Jose, thank you so much for creating this podcast.
It's always, let's just say, back up and say, always a pleasure to talk to you.
Oh, thanks, Jose. I know today that you guys are going to be discussing a question that you get quite often, which is, what does it take to write an effective financial plan? And I'm sure you've been asked this throughout your entire career. So what's the answer to that?
You know, I love the topic because when your visions are clear, your decisions are easy, right? Mm-hmm. And we find it, most people, they struggle with the decisions that they have to make with insurance and investments and their retirement plans, wills, trusts, taxes, just all the decisions that we have to make with money and how they tie together and how they interact. And, we want to make smart choices with money, but sometimes there's so many decisions that we have to make that it becomes difficult. So I think, the intent is all right, let's get organized and how do we simplify it all and simplify the process. So that way, whether we're families or we're business owners, that we've got an effective plan and everything can tie together so we can achieve and focus on the things that are most important to us.
Yeah, absolutely. And I know that just listening to you guys and knowing how much goes into the work that you do, I think most people that try to do this on their own could get analysis paralysis kind of thing, where it's just like, oh, I'm just overwhelmed with everything that I have to get done.
And, we really answer 4 questions in the area of planning. Number 1, how much cash reserves you should have or how to get it there. Number 2, what's the best way to reduce or eliminate debt on a schedule that works for you. How to allocate your assets so you have the highest probability of achieving your goals. And then we answer 3 questions in the area of insurance. Should you have it at all? And if you should have it, what's the right kind and what's the right amount? So those are all into an effective financial plan.
Gotcha. So that was quick and that was hard hitting, Jose, but my head is spinning. So where do we start in this process? Because you got to start somewhere.
Right. So, we believe that every decision you make with money impacts everything else. So you do have to take a holistic approach to it. We've got a process called financial blueprinting that kind of serves as a good guideline, a good roadmap to follow. Mm-hmm. But, first would be getting organized. So checklist of what documents to get together, which is retirement plans, IRAs, Roth IRAs, investment accounts, insurance policies, wills, trusts. Really just those documents that either has to do with insurance, investments, taxes, estate planning, and make sure we've got a good grip and we assess where we are and getting all that together. Second step would be to kind of think through life. Hey, what do we want out of life? What are the things that are important to us? It's not that money's not important, but in the grand scheme of things, it's not the money. It's just the impact that money has and the role that it plays. So it's good to think through, hey, here's the things that are most important, from a role that money may or may not can provide. Number 3 would be to put some structure around goals, objectives, really anything that requires money or planning to achieve. So that way you've got some real tangible financial goals of, where you want to be at some point in the future. And then number 4, reality check. Hey, where do we stand? Where are we now? We know we just defined where we want to be, and then do more of a gap analysis and say, all right, here's where we are. Here's where we want to be. What steps do we need to take in order to bridge the gap between the two and make sure everything kind of ties together?
Yeah. When you're working with people, what kind of gaps do you see?
Just in the insurance, I'll start off in that area right there. But, the types of insurance, you have life insurance, whether it's whole term, universal life, and variable life, disability, business overhead insurance, health, long-term care, homeowners, auto insurance, just making sure that you've got your liability insured, umbrellas, professional coverages, different types of riders on these policies. It can be so confusing to the consumer. And I think, life insurance policies, are they going to last? And so we really get into a deep dive there. Like I said, we answered 3 questions. Should you have it at all? And everybody's in different situations, so there's not a one-size-fits-all. Just making the insurability. People have pre-existing conditions. They have annuities. Sometimes it's an immediate or a deferred annuity. And what's the right kind of, how do you work with in that space? So
let me jump in. Let me jump in real quick, Jose. I think the word insurance. I mean, there's obviously all kinds of insurance on everything. I think the real issue is, if something happens to me, what impact does that have on my wife, my kids, my business, and the people that rely most on me? Yeah. And I think those are the real questions of, all right, so what could happen? All right, I could have a big medical expense. How am I going to address it? I could pass away, die suddenly. How do I address it? I could be disabled and I can't work for 6 months or a year or 5 years. Is that important? If so, how do I address it? But really just thinking through, if something were to happen, what impact does it have? And how do I address it? And making sure that I'm thinking through those contingency plans of what could disrupt, the success of myself and my family in planning for the future, and how do we address it? And I think more often than not, especially things around disability and life insurance and, some of these other things, it's more often than not, people will address it once. But as you know, life changes over time. Our financial situations change over time. So what we bought 5 years ago, 10 years ago, most of the time are either outdated or they don't fit our current circumstance and what we're trying to accomplish now. So what Jose said is right on. I mean, you have to assess, all right, what do we need? What are we trying to accomplish? And do we have the right plan for what we're trying to do?
So before we move on to the next part, I just want to emphasize here, even the beneficiary designations, we have seen XY and people that they didn't intend to have as their beneficiary. That's an important factor. And a lot of times it's group insurance. It's amazing. It's part of a checkoff list that we just make sure that things are aligned based on what you're trying to accomplish.
Gotcha. So it sounds to me like insurance takes care of the liability gap, but what other gaps are there that you guys are looking for?
Yeah. So one is obviously you want to start with debt. We want to create a game plan to reduce or eliminate debt on a schedule that's realistic and that fits you. The more we can get out of debt, the better we will be financially, and the better we'll be able to save for the things that we really want to accomplish. So debt is definitely number one, is how do we address it and on a schedule that fits. Number two is making sure that we've maintained or build up a good, balanced cash reserves or an emergency reserve. So that way, if something happens and, life is what it is, things happen, that we've got enough money there that we can write a check that we can pull from in order to take care of those contingency plans and those emergencies.
Yeah, that makes, we almost ran into one of those situations just a couple of weeks ago. My wife almost got us a dog. His name was Tiny, and he happened to be a 225-pound Mastiff. That'll definitely eat into an emergency fund, as I was not expecting to feed a dog that big, but no, we didn't get the dog. So I get that. Absolutely. Debt management is great. What's next?
I was just going to add just real quick on the cash flow, what he was talking about, having that liquidity. I mean, things are going to happen. It always has happened. It could be a world event that we can't control. So having a good emergency fund for those times really puts you in a proactive role that we're not grabbing money out of the wrong buckets. So.
Yeah, so good rule of thumb, 3 to 6 months worth of expenses in an account to plan for the unforeseen. Sometimes you go ahead and create maybe a year's worth of income or a year's worth of expenses if we're retired. Some people more comfortable with a year or two. Any big purchases that we know we have in the next 6 months, the next year, you want to take the risk out, so you may be a little heavier in your emergency reserve for those short-term expenses. But I think the key is just making sure we have those reserves for when life throws those curveballs or we have those immediate expenses. So you got debt, all right, and you've got emergency reserve. Jose talked about, 3, which would be the insurance, making sure we're prepared for the unexpected or protecting the people that we care most about that are relying on us. And then once those things are addressed, then you can, look at, okay, now what are the things that we're saving for? Where do we deploy the extra money? How do we allocate the assets that gives us a higher probability of greater returns with the least amount of risk necessary? So, depending on what's important to you and what's next. For some people, it may be college. So do we put money in a 529 plans or UTMAs in order to save a little bit of money now to, have that money grow to take care of college? The next step for some people may be retirement. So you look at what are the 401k options or savings plans through work? Is there a match? Is there a profit sharing? Let's make sure we're taking advantage of that. If there's not, or there is, and we still have extra money, maybe we look at Roth IRAs or any other investment type, investments we can make in order to have money grow that's intended for something above and beyond what's needed for debt or emergency reserves. But I think the intent is just to make sure that we've got a plan in place, that we know where these extra funds or extra savings, these investments are going, so that way they're as tax efficient as they can be, a little bit more growth oriented because we've got a little bit more time to be successful, and just making sure everything is working together and just efficient for those things that we are trying to plan for that, may not be immediate, but maybe a little bit longer term in the future.
All right. We're getting there. I mean, there seems to be a lot of moving parts here. What else are we covering today?
I would say what's really important to a lot of folks is asset protection. We're in a sue-happy society, so, just making sure that your assets, if you have 10 different pieces of property, people are concerned about what if something happens to this property, does it affect my other properties, but making sure that things are titled correctly and protecting assets and working within the laws that we have that's entitled to it. So I think asset protection, under Texas law, there's 4 things that are protected in the state of Texas
Homestead.
From bankruptcy and creditors. 1 is your homestead, 2 is your retirement plans, 3 is annuities, and 4 is your life insurance policies. People are really concerned about the asset protection. I think that's and not only that, when you pass it on to the next generation, you've got the estate tax issues that you want to prevent, inheritance taxes and so forth. So having structure and having family limited partnerships and getting things structured to where you can discount the estate, so you can not really burden the next generation, but no one wants to pay tax if it could be avoided.
Yeah, absolutely. So does that get into the area of trusts and things?
Yeah, so the I guess there's 2 more topics, right? So there's estate planning, and then there's the tax side of everything. So under the estate planning piece, it's really more of a if something happens to me, what do I want to have happen, and vice versa. You've got issues both personal and business, kind of thinking through the same thing. If something happens, what do I want to have happen? How do I make sure everything's a smooth transfer to my spouse? How do I make sure there's a smooth transfer to the kid? And when you've been fortunate enough or you've taken the proper steps to be disciplined enough to save money and create wealth, then the things to think through would be, if something happened to both of us, do I want everything to go to my kids and grandkids, or would I prefer to maybe put a little structure to it and have it spread out over a period of time? What if my son or daughter, what if they get a divorce, or what if something happens to one of them? How do I provide for that health, education, maintenance, support, but make sure that, everything stays in the bloodline? So there's some thinking through of what we want to have happen. How do we structure it? Is it structured that way now? What adjustments or changes do we need to make? And just make sure that if something did happen, everything is already in place. One other part that we tend to see is there's some assets that have to go through probate. There's some assets that are able to avoid probate. So, taking that into consideration as well. Do I need a will? Do I need a living trust? Is probate an issue? Do I want to keep everything private? And depending on your situation, you have to think through. And, a part of an effective financial plan is knowing, hey, if something does happen, what is the plan, and having it in place as well.
And I would just add just a quick breakdown on the estate planning side that he just kind of emphasized there is a power of attorney for health care, power of attorney for finance and guardianship and living will, and just having those things in place so you're making the decisions of what you want to have happen in case you're incapacitated and so forth. So it's really having just a game plan that's thought through all the way.
Yeah, and I'm sure it's not easy to have those conversations, but bottom line is that anybody with family needs to.
You know, it's funny you said that. I think the most important thing, too, is communication within the family. And sometimes we don't communicate that. Next thing you know, people are in a twilight zone. But having everything simplified and organized really puts you in proactive mode. And people want to take action when it's for the benefit of them and their family.
Makes sense. Absolutely. So what else do we need to talk about today?
I think taking action. I always say action. No action is action. And implementing the plan. Once you have a game plan and it's tied into the reasons of what's important to you, then taking the steps and disciplined approach. And, you know, I don't know about you, but I pay a trainer to train me to show up at the gym, and I have to have somebody hold me accountable. And there's some people that need to be held accountable, some people that don't. And there are three types of investors that I have found, or three types of people, and that's do-it-yourselfers. People want to do their own homework and research. Then there are collaborators. People, you know, maybe got one area down, but they want feedback in three other areas on what else are they missing. And then there's people that delegate. They just, hey, you handle everything. You know where I want to go. Just let me go live life on purpose and enjoy my life, and just make sure that check is coming in every month.
Yeah. So now let's look at it. Go up 30,000 feet, and you've got this effective financial plan. How often are you reviewing this with your clients to make sure it's still on point?
I think there's a lot of moving targets, right? Because one thing about life is it always changes,
Absolutely.
Whether it's tax law or world events or goals or expenses or whatever the case may be. So, you know, we recommend a couple of times a year, you know, somewhere around January, February. That way you can kind of see how the year ended up. What does the year look like? What's the game plan? What big expenses do we have? What does the income needs look like? And make sure that not only are we thinking through the year, but also anything that we need to do before tax time is very important. I think the other time that we found to be the most efficient is somewhere September, October. It seems that most benefit books, any changes you want to make through your company's benefits or retirement plans, or especially anything related to insurance, is around that time, all of your elections. So if you can have something in that third quarter, early fourth, that way you're thinking through how those decisions impact the other things, as well as gives you enough time to make any adjustments, especially in an investment situation before the end of the year, to think through. There's nothing worse than, man, I wish I would have done this. This would have helped me in taxes, but I didn't do it by the end of the year, so it's too late. So I think at least those 2 times a year is good practice. But, you know, every situation is different. Some people need to meet once a quarter because things are more complicated. Some once a year is fine, but those are kind of the critical dates that we see more often than not.
And I'll give you an example of today. You know, somebody's coming off a COBRA plan. They've had it for 18 months, and they got some pre-existing conditions. So you've got this enrollment period that's coming up at the last quarter of this year to have insurance coverage that will cover pre-existing conditions. The second thing, person's turning 62. Should I take my Social Security at 62, 63, 65? How is my Social Security going to be taxed? So we have to set up a review for that. And, you know, then you find out somebody been meaning to get a will done, but just hadn't got it done. So it's different where everybody's different in what they're trying to accomplish, but it's just holding them accountable and having these things, making sure that we take action and making sure we don't put people at risk to not fulfill the things that are important.
Gentlemen, great information today. Thank you so much for sharing. Any closing thoughts before we wrap up today's podcast?
You know, I always say that anytime you can call timeout, you know, it's too important. It's your life. People rely on you. So if I can just encourage you to call timeout, let's get organized, let's get everything down, let's get everything on paper, and just think through, hey, here's the things that are important, here's the things that I want to accomplish, here's reality of where I am today, and how do we create a step-by-step plan of action in order for you to achieve the things that are most important to you.
It was important to have this podcast because some people think that financial planning is just your investment planning, but it's more than that. And so it's just looking at all different areas of planning. And I'm going to have to say, based on my experience, I've probably only have seen 3 or 4% of the population that has everything in order. And so there's a lot of people that there are holes and gaps in the plan. People don't know where the gaps are. Getting a second and third opinion, I think, is.
Yeah, that can be a little scary. That's a very low percentage. So such great podcast, great information. I'm hoping that the listeners are going to share this. So Jose and Jeff, thank you so much for your time. And of course, our last thank you always goes to you, the listening audience. Thank you so much for tuning in and listening to the Live Life on Purpose podcast with Jose and Jeff Feliciano. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when the guys come out with a new podcast, it'll show up directly on your listening device. This makes it really easy to share these podcasts with your friends and family. And this one's a great one because I don't think people think of all the pieces of the puzzle that they need to put to make sure the picture is clear. And these guys can help you out. So again, thank you so much for listening today. For everyone at Feliciano Financial, this is Eric Johnson reminding you to live life on purpose.
Thank you for listening to Live Life on Purpose with Jose and Jeff Feliciano. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Feliciano Financial Group. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.